Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
AI just became Wall Street's favorite illegal performance enhancer. And you're still trading like it's 2012. Here's the verdict. AI is now the hidden leverage inside US stocks. And if you ignore it, you're the exit liquidity. This is not financial advice, but here is the truth. Let's start with the only regulator accidentally pumping the next bull market, the FDA. StatNews reports the FDA is launching an effort to speed up clinical trials using AI. Translation: the slowest, most bureaucratic sludge pit in American capitalism just grabbed a jetpack. AI models to design trials, pick patients, monitor safety, cut timelines. That is the core bottleneck for biotech and pharma. Not marketing, not sales, time. If AI chops even 20-30% off trial duration, that is a brutal repricing event. You're not just shaving costs, you're pulling cash flows forward. Wall Street values time more than life. Now look at the tape. The S&P 500 sits at $711.58, down a microscopic 0.02%. That's not calm, that's anesthesia before surgery. Futures are flat, while everyone stares at the Mag 7 earnings and the Fed decision like tourists watching a volcano. The index looks boring because it hides the real fight, which companies actually own productive AI, and which just throw AI in every slide deck like parsley on bad pasta. The market isn't correcting, it's sorting, quietly, violently. Underneath that tiny -0.02%, careers are dying. Then there's Nvidia, $209.25, down 1.884%. The golden god of the AI trade takes a punch. Everyone cries, is AI over? No, that's not a trend shift. That's the tax for being the casino everyone's using. When AI stops being just a chip story and becomes a profit story across the index, Nvidia doesn't die, it becomes plumbing. Less sexy, more systemic. And when something becomes plumbing, it owns rent on the entire building. Put those three together. Regulators weaponizing AI for efficiency. The S&P pretending nothing's happening. The core AI arms dealer getting clipped on a red day. Here's the cliffhanger. The AI trade is about to leave the tech ghetto and walk straight into the bloodstream of the entire US stock market. And most of you are still arguing about which chatbot writes better fanfic. Now, let's talk about the trial no one wants to think about. Elon Musk versus Sam Altman. According to AP, Musk is taking the stand in a trial that can reshape AI's future. That's not drama. That's regulatory and strategic framing for the next decade. Who controls the training data, the model governance, the guardrails? That defines who prints margin and who rents access like a peasant. This is not about feelings, it's about who gets to tax intelligence itself. While that circus runs, the Fed sits in the background, pretending it's still in charge. Wall Street waits for the rate decision like it matters more than the GPU supply chain or inference costs. Here's the unpopular truth. The Fed can move the cost of capital, but AI is starting to move the shape of capital. Lower trial times, automated research, AI risk models, synthetic data, those change what investments are even possible. Rates are the volume knob. AI is the playlist. Back to the FDA thing, because everyone is massively underpricing it. AI in clinical trials means faster go-no-go decisions, fewer zombie programs wasting billions, earlier revenue for the winners. That's a direct attack on one of the worst capital allocation sins in healthcare, lighting money on fire to generate optionalities that never pay off. AI trims the lies. That flows straight into earnings quality, which flows into multiples, which flows into the S&P, even if most people never read a single FDA press release. Now zoom out. AI shows up in trial design, drug discovery, forecasting, risk management, trading, and yet the index is flat, like nothing changed. That's not stability.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
That's denial. Nvidia dropping 1.84% on a day like this tells you something simple. The market still treats AI as chip cycle beta instead of structural margin stack. That mispricing is where real money is made and dumb money gets vaporized. Everyone wants the shiny chip. Almost no one is mapping where the productivity lands in the income statement of boring companies. The Musk-Altman legal war is the spiritual version of the FDA move. The FDA is saying, we'll use AI to change how we regulate reality. Musk and Altman are fighting over who defines the boundaries of that reality in the first place. That's not philosophy, that's enterprise value. If you own the infrastructure and the rules, you own the toll booths across the entire market. Tie it back to the S&P. At $711.58, barely moving, you're getting a snapshot that lies. Underneath, AI quietly shortens project timelines. AI quietly cuts white-collar fat. AI quietly rewrites risk models for banks and funds. Those changes rarely show up as AI revenue line item. They show up as surprise margin beats, more resilient earnings in downturns, higher justifiable multiples for the killers, savage compression for the laggards. Here's the connection nobody wants to say out loud. AI is becoming the invisible leverage baked into US stocks, and the real divide won't be growth versus value. It will be AI native versus AI roadkill. AI inside the FDA. That's the state saying, we're fine with AI accelerating time to cash. Musk versus Altman, that's the elite fight over who sets the rules for that acceleration. Nvidia wobbling, that's the market trying to figure out how to price the shovels when the gold rush starts paying actual dividends. So what does this mean for you? First, stop treating AI like a side quest or a tech trade. It's an operating system for the entire US market. If you're looking at US stocks without asking, where is AI in this business model and how fast does it hit earnings? You're trading blindfolded. Second, your old factors are stale. Low PE, high dividend, safe blue chip. None of that survives if those companies refuse to deploy AI in core processes. In a world where the FDA uses AI to cut trial times, any healthcare company still doing Excel and PowerPoint medicine deserves a valuation funeral. Third, stop worshiping volatility as a signal. Nvidia red today doesn't mean AI over. S&P flat doesn't mean all priced in. The real signal is structural. Where is AI mandated or enabled by regulators, FDA, financial oversight, etc.? Where are the legal fights that define who controls the rails, Musk versus Altman? Where is AI actually hitting cash flows, not just headlines? Here's your 3-point takeaway, no sugarcoating. 1. AI is now systemically entangled with US stocks, from regulators to megacaps. It stopped being tech and became infrastructure. 2. The index numbers lie. Flat S&P and a red day for Nvidia hide a regime shift where AI-native companies will drain the life out of everyone else. 3. If you don't build an AI lens for every US stock you touch, product, process, regulation, and capital allocation, you're not investing, you're donating. This is not financial advice, but here is the truth. The market just gave you a preview of the AI regime. FDA acceleration. Musk versus Altman. Mag 7 earnings approaching. You can either pretend it's noise, or you can accept that AI is the new leverage embedded in every serious US equity story. If you want more of the brutal version, no hedge words, no fairy tales, hit subscribe, drop a comment with the AI angle you're tracking, and share this with the friend who still thinks AI is just a bubble. I'll be here tomorrow, reading the tape while everyone else reads press releases. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.